All right, let's talk about hobbies. So recall that we remain in this continuum between business versus personal. And how do we separate someone who's operating a for profit business from someone who has a hobby and is trying to claim that it's a business? Knowing that the second you claim that it's a business, you can deduct those expenses that are associated with it. So, obviously, businesses can create a loss. That's the other thing. A hobby cannot. And to make matters even worse, currently, hobby expenses, except for cost of goods sold, because that's part of gross income, are no longer deductible. Now, if the code stays the way it is and the provisions expire at the end of 2025, they will return to being deductible as a miscellaneous expense subject to the 2% of AGI floor as an itemized deduction. So only if you're itemizing would you continue to take your hobby expenses as deductions. Okay, so big difference between the two. So how do we determine? Well, there's a safe harbor test. If you've generated a profit in 3 of the last 5 years, including the current year, then under the safe harbor, you can treat that activity as a business. Other factors to consider: do you conduct it in a business-like manner? Do you have expertise in that area? What's the amount of time and effort you devote to that activity? Is there a reasonable presumption of expected appreciation in value? Have you demonstrated success in similar activities? Do you have a history of profits and losses? What amount of profit have you generated, if any at all? What is your financial status? Meaning, how much do you depend on this activity to give you the money you need to live? And then, are there elements of personal pleasure that might trigger this as being more of a personal activity than a hobby? All right, and that's really it for hobbies, right? See you at the next video.